Hello. Follow me at Gumby9662C if you don't mind. I'm going to look back at the last rate hike and how the markets behaved right after that rate hike and try to get some ideas of some trading we may want to do here, okay? As you can see, we had this trend line right here and we came off that on the SPY. And the day of the, we had a down day of the rate hike in the SPY, which as you can see there, for about a week and a half, 2 weeks, we had lower lows in the SPY following the rate hike. Now your NASDAQ on the same day, we just continued to have chop for another 2 weeks, and then we finally broke that trend line. So we're not probably going to see much reaction in the technology space. Now on the Russell IWM, it's quite interesting here. On December 14th, we came down, and that started the beginning of this, the bottom of this channel that we were in for a very long time. Well, I find it quite interesting on this pullback. We came right down to that same price that happened on the rate hike on December 14th. And now Friday, we got a responsive bounce off that area. But I do want to point out the rate hike was a down day. But we didn't see much more weakness after that day. We actually got a rally in the Russell after that. So just keep it on watch. The December 14th close, that's a critical area for the Russell. If it ever breaks that, I think the markets are going to be in a little bit of trouble. Initially, bonds caught a huge bid on rate day, and they just completely sold off from that point on. Had a huge day on bonds last time, although we didn't find lower lows. In fact, it started after the rate hike. Bonds started to tick a little bit higher actually. So but the next few days are going to be quite interesting. If bonds are already at a support level, so this is going to be a little bit interesting how bonds are going to react to this rate thing. Gold got creamed on the last rate hike day, and then it continued lower the next day before it finally found some footing, and then it went on a nice rally for a long time there. So just keep this one on watch. The reaction last time to gold was to sell gold off on the rate hike. This here was just dramatic. Silver just completely got a huge gap down, and then it took a few days for it to work it out before it finally started a bull rally for the silver. But the silver is not one that I would want to hold going into the rate hike to the long side. Another day in history, crude oil on rate day, and it may, it could very well not repeat itself, but it had a very big gap down, bad day on when the rates came out, which followed through on the next day. And I want to point out, crude closed right on trend support here. So there's a lot of risk that crude will break support going into this week. Another chart which was quite interesting, you see this trend line that we've got going on here? It was a prior resistance now, and then we've been trying to trade above it. Well, we were right up next to this and sold off hard there on last rate day back in December 14th. Well, guess what? We're right at that level again, right below it, just like we were before, and we're going into that Wednesday. So that suggests to me that we're most likely going to find some weakness in our materials this week, XLB. And despite what you think, XLF, it initially sold off on the day for rate day, and we had some weakness coming into rate day, and it sold off even a little more. But it just kind of went sideways for a very long time from that point. All the move had already been priced in, which could very well happen this time too. So just keep that in mind. Another one of the strongest down movers for the day, that was your XLU. It was up on trendline support going into the news, and it just got rejected hard. And look where we're at right now, and this to me screams short going into the rate hike. We're right here on the 20 SMA, just ready to break down. So this is one of my favorite short setups going into the news. Now another one, your transports tend to lead the markets, okay? We had a very bad day for the transports when this news came out last time. And we had almost 2 full weeks of downside on the transports after the last rate hike. So it's hard to say if they're completely correlated, but it's something to keep in mind. Now your airline weighted transportation index, it did see another 3 weeks of sell off post the interest rate hike, and we are sitting right on our 50-day moving average right here. So this gets me quite nervous about the transports, knowing this news is coming out and the reaction that was seen last time on the this news. In our steel stocks, this is material stock, we did see a continuation in the downslide post the last interest rate hike. So just keep that in mind. And we are turning bearish on the steel stocks here. The one chart that really stands out to me was the home builders. We had a high. We were putting in a high right here. Then those interest rates came out, and we had the rate hike, and boom, the home builders sold off. So I am in Lennar, and I am going to hold that all the way through the rate hike. Come later this week, because I do think the home builders are probably going to get a pullback based on what happened last time, because that was a significant move on the home builders post the rate hike. IYR, your real estate REIT ETF, on the day of the rate hike saw a huge move on the decision for the rate hike, and we are not even down to support yet on this move on the REITs. So just keep that in mind. After the rate hike, the initial reaction was recovery. So you can't to think there's going to be for sure continuation. It's hard to say at this point. But really risky taking any REITs to the long side. Your consumer discretionary started the beginning of a bigger move for a correction. So keep this one on your radar. We're coming right into trend support, and we see what happened last time. See, this was a prior uptrend right here, okay? And now we got this uptrend, and we're likely to break that uptrend going into this news event. And it didn't happen the first day. It happened 2 days later whenever things started breaking down on the XLY. And the last one I want to talk about, and that's your consumer staples. We had the rate hike, and it was trading at the top of a range. We're trading at the top of a range right here, right now. And it sold off on the rate hike, and it continued to sell off for a good 4 or 5 weeks after that before it finally found some support. And look at this, we got a parabolic 20 SMA supporting us going into this news event. So there's, to me, to just wrap it all up and everything, if history repeats itself and the markets sell the news like they did last time, we are due for a massive correction at the end of this week. That's all I got to say, and please share this video with everybody you can, and like me at the bottom of the YouTube video, and give me all the comments you possibly can. I do appreciate the feedback. Thanks a lot.